Broadcom is one of the companies that's benefiting significantly from the rising effectiveness of artificial intelligence. The company makes AI accelerators and custom chips like the ones used by Alphabet, the tensor processing units. It also makes networking and connectivity for AI data centers, a segment that's absolutely soaring. So it doesn't surprise me that a lot of investors are interested in Broadcom stock. In this video, I'm going to evaluate the company, look at their revenue growth history, look at their margins, their cash flow, their returns on invested capital, and compare all of that against its valuation to determine if Broadcom stock is a buy, hold, or a sell. Let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So looking at Broadcom's revenue growth history over the last 3 years, we need to highlight a couple of factors, most notably being their acquisition of VMware, which has boosted the company's revenue growth for a few quarters now. Of course, when you add a new company and you absorb all of their revenues, it makes your revenue growth look better than it was. But besides that, organically, the company had been growing itself. And so to add that new company's revenue to the mix only added to the existing revenue growth that Broadcom was demonstrating. Furthermore, it's absolutely thriving in the AI category. In the most recent quarter, where the company reported their quarterly earnings results, the stock price jumped by almost 10%. It's because investors really like Broadcom's AI revenue, which soared by 77% year over year to $4.1 billion. I suspect that Broadcom will continue generating strong revenue growth in the data center segment optimized for AI, because that's the segment where a lot of the spending is happening right now for AI. I've talked extensively about companies like Amazon, Alphabet, and Microsoft and Meta platforms collectively spending over 200, $300 billion on capital expenditures building out these data centers. And that's a category where Broadcom will benefit. Broadcom had done a great job expanding their operating profit margins until these recent 4 or 5 quarters or so. But the management team talked about how the acquisition of VMware will hurt margins in the near term for a couple of quarters. But as they harvest the synergies they expect and as they cross-sell customers on VMware services, they're very confident that their operating margins will return back to closer to the 40% range that they were hitting before the acquisition. Broadcom had been expanding their margins as well in those recent years. Similarly, the cash flow from operations to sales was doing excellently before the acquisition. And of course, after the acquisition, it faces a bit of a headwind similar to the operating margin. But again, management is confident that these numbers will recover back to the levels before the acquisition. And, I'm kind of glossing over the fact that they're going to achieve the thing they say they're going to achieve. And I tend to take a historical approach to management guidance. If a management team has proven to me in the past that the thing they're talking about they've done before, I tend to give them a higher likelihood of achieving that task. And Broadcom over the last decade has made several acquisitions and has made those acquisitions effectively. They haven't had these major blunders where they paid $100 billion for an acquisition and it didn't work out well and they had to sell it for $20 billion, right? They haven't been one of those types of companies, which there have been many of. So for that reason, when management talks about the synergies and the optimizations from the acquisition, having the company's margins return to the levels they were before the acquisition, I give them a reasonably high likelihood of success in that because they've proven that several times before. So as an investor, when you're analyzing a management team, that's what you have to look for is, has the management team delivered on the things they've said they're going to deliver in previous years? I often pick on Tesla as being the opposite of that, right? They've persistently told you that next year they're going to have driverless car technology, and they've been saying that since like 2016. They said they're going to have a $25,000 model. They've said that for many years. That looks unlikely to happen. They said they were going to sell 10 million cars by 2030 annually. That looks unlikely to happen. So when you have a management team that persistently overpromises and underdelivers, you have to lower the probability of success of the things that they say they're going to achieve. And it's the opposite with Broadcom. The returns on invested capital, again, we see the same story, right? They were doing a great job. You see those margins rising close to 25% there. And then after that, after that acquisition, of course, that's a lot of capital they have to deploy to make that acquisition, right? Total assets increase. You're employing a lot more capital. And so you've got to generate a lot higher returns to have the same level of return on invested capital when you deploy a lot more capital. And it's just taking time for Broadcom to digest that acquisition, bring everybody on board, find areas of redundancies to let people go, find opportunities for cross-selling to capitalize on customer acquisition. And so that'll take time. But again, given Broadcom's history, I'm reasonably confident that they can return to those levels prior to the acquisition. So finally, let's look at valuation. Broadcom stock is trading at a price to earnings forward of 25.6, near the higher end of its valuation going back 3 years. And similarly, on a price to free cash flow basis, the stock is trading at a higher valuation than it's been trading at in the last 3 years. Now, you have to take these with a grain of salt because the denominator in these cases, the earnings and the free cash flow, are lowered because of that massive VMware acquisition. So these are cyclically low earnings and cash flow for Broadcom, which are expected to rise considerably in future years. So to answer the question, do I think Broadcom stock is a buy, hold, or a sell? My most recent rating had Broadcom rated as a borderline buy. For me, that's between a buy and a hold. And given the cross-functional factors going on here, the difficulties with the falling margins and cash flows and the higher valuations, coupled with the fact that they're in a booming industry in artificial intelligence and things are going very well in that category. As I mentioned, 77% growth year over year in the most recent quarter in that category. So these offsetting forces are working against each other, and I'm keeping Broadcom stock rated as a borderline buy, and I'll update that recommendation today. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.